All right, guys, welcome to a new recap of yesterday's price action. I didn't trade at all yesterday. I didn't do anything at all yesterday. It was a chill day. Today we're on it. I woke up early, went to the gym, working the whole day. So Saturday well spent instead of my Friday well spent. Yeah, that's it. So let's dive into Friday's PA. I don't know. I can't remember. I don't think. No, I didn't do a recap on Thursday's PA either, but I'll just like blend it in a little bit and just see what happened. Because basically, I was looking for this long on Thursday. Oh, I'll just do the Thursday and Friday. Although I only have like 20 minutes, so I'll just try to do it. Essentially, we had this bullish PA and we had the DXY. If I just pull it up real quick, DXY was like this, it was still bearish. And then we can see over here that we had this liquidity grab. Let me go to the 5-minute to the replay mode. And we had like this 50-minute fair value gap over here. And on EU we broke bullish. No, sorry, I'm saying it wrong. I think, yeah, so we had this bullish price action, low, high, higher, low, higher, high, higher, low, higher, high. And this liquidity. This break, which I class as a liquidity grab, was essentially bearish break. As you can see, we had a low, a high, a higher low, higher high, return to discount, bullish break, bearish break. Same with DXY. And then, but on DXY, this wasn't like this low was not like created over here. This was not a strong low, and therefore this high was not a strong high. Therefore, this break was, we were still inside this bearish range, and therefore I was favoring the DXY to come lower and continue bearish. And lining that up with EU, I class this as a liquidity grab rather than a bearish break. And I got into that trade on the 1 minute. Let me show you. After that bullish break here, entry broke again, so I reduced it, and then I saw DXY turning around very swiftly. Plus, we already reached the discount or the premium. So, hold up, no. So we were already above these highs, and then we came above here. We have this internal bearish break, and we took internal range liquidity to the upside, and I was favoring overall short move. So therefore my bias started to change because I was overall hoping to short from somewhere here. But as soon as price came above here and gave me the bearish intent, I was like, okay, I have to be careful. And I just closed this trade at break even. And that's basically it about the trade. There's nothing much to it. This structure, and then just targeting these areas to continue short. No, nothing but more than that. No. Knowing that this was a bearish break, let me take off this. And that we are above previous daily highs, above internal highs and above Asia highs, we can look for a turnaround and essentially class this as a 15-minute break. And you could either look for a direct entry as it's also on the 5-minute, and we grab liquidity and then we get the break. And you could class this as your entry. This is your early sellers over here. Why this one? Well, you can see over here, we break below this. That's some minor break. So then this is your early sellers. And you get your short move from here. Seven, 8, and something like this, and then you can target. Well, there is still this area where you can long. There's still this area you can long from over here. I don't know why it's not marked out, But I had this class as liquidity, and essentially we have all this liquidity here, so you can, well, not hold, but you can aim for a previous daily low, in my opinion. I don't expect a long from here. There's no internal range liquidity. You go lower, so there's no liquidity, so you can just, there you go. Thing is though, news over here, and you are already break even at this point. So I think news will get you out at, or I would be a break even at least, because you get a break, return, break. So my stop loss would be somewhere around here. Then knowing that there's news, you would just go break even or take partials. Essentially, you want to take partials at this low, but I don't think you get like much out of your trade if you partial there. But yeah, 1, 2, 3, 1, 2, 3, 3, 3. So yeah. Now, if you zoom into the price, bit of price action over here, what can we see? So we get 1 minute shifts over here, and we essentially get this liquidity. So this is the thing with this entry drill, that you miss out on some very sick trades, because if you just enter from this fair value gap, I mentioned the risk to reward, but nothing is telling me that price should come up there. Price should have just should could have also just moved from here. Yeah. What? And if you got it from here, then you would have hit a sick trade already. Another thing you can do, and that's a bit risky, but that's what I try to do now, is instead of giving 1 pip reading room, I just wait. Okay, strong candle. Well, if I already entered here, I would have got a 4.5, right? 4 to 5, 4.5 risk to reward. So this would have been my minimal entry. I could have entered here as well, 3.5 to this point, and then just calculate it and see at which point you get a 1 to 4. And then you enter there, and you can try, but this makes your edge less mechanical if you try to do this, but it gives you slightly better entries while still following your entry drill. So you just wait, you just try to enter as high as possible, and like you just choose a point where you're like, okay, fuck it, I'm just gonna enter from this point. And that's also the way you get like super sniper entries. Imagine you waited for this liquidity while using my entry drill, then you would have got the ultimate snipe, because it's like 1 pip and then turn around instantly. It's tap and go. So yeah, that's it. Then you got continuation trades if you want to take that. I don't want to go very much into detail. I do want to, but it's pretty straightforward. So we took that liquidity, get the turnaround, then news came up, liquidity grab again, liquidity grab again. Same story really. Thing is that this bearish break has a return to discount. So this would have been classed as a bullish break. Now, if you line it up with the XY, over here, yeah, same story here. So we break bullish, return to discount, bullish, bearish break, and this would have been a bearish break again. So a bit tricky. And then if you trade the continuation, this is very interesting. I like this. Then you can see we have this range with the idea that this is not going to hold. You can look for a short the next day, and we can see we build up some liquidity over here. 1, 2, 3 lows. Then you got this 50-minute demand zone, supply zone, sorry. You can see some internal range liquidity. Oh, what time is it? All right, no, about 50 minutes left. Internal range liquidity, 50-minute supply. Only thing is there's no entry. There's a direct entry though. Previous daily lows are here. You can target those. Turn, you get an entry during Asia. And there's only direct entry above all the liquidity from this zone. So it's a nice price action, but just no entry drill. Entry, I don't know what the English word is. Spawn? Well, the thing in my mouth that holds my teeth straight, it's loose. And it just makes me and talking worse. I'm trying to better my English a little bit, like maybe have a more UK accent to it, but at the same time I talk with a lot of American people as well, so it's just a mixture of everything. And then we got the continuation, and we can just quickly look. There's not really a long trade here. Nope. There is a long trade here, and I think that's from the area I was talking about. Yeah. So we now reacted. No, we didn't. But I was talking about this one over here. We tap in. So it's a 1 hour area. Unfortunately, you could class this. Oh, over here. There's a refined area. Sweep. And then you get your 50-minute area from this. There you go. Because this would have been essentially the buy or sell to buy move. So it would have been big like this. Well, then we reach the 50% anyway. But let's just stick with this one. The sell to buy move. Then go lower. Hold up. Go up a time frame again. Remove this. So we are now below previous daily lows. What can we see before we take previous daily lows? We can see an inducement going on over here, inducing buyers into the market. Why there? Well, I'm gonna zoom out and I'm just gonna pretend I don't know. Well, actually, I don't know, but I guess there's a like some supportive resistance area. Basically, because if you look over, it's loading. Because if you look over here, you can see that this area, oh, again, it's so nice. Look at these 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. So 11, 12, 13. This is a huge area. And it actually, you can actually trade from it. So it's slightly bigger actually. Well, this is too big. This is like too big, but you could refine it. And you can just see this zone essentially works as a support and resistance. Here you react around that area, then this is a bit lower, to be honest, so not that many reactions, but here, same thing. Maybe actually I didn't draw it on completely right. It should be like this. So actually where the trade came from and not where this one stopped. This is like a minor one, as you can see. This one, this one, this one, I'll react from there. But essentially it's kind of a support and resistance zone. Inducing sellers buys into the market, going lower. What can we see? This was the highest point. High, low, lower high, lower low, bullish break. And this is a trade that fits my entry drill. Nice. Oh no, is it a 5 minute swing? Yeah, okay. It doesn't give me, it would have been a break-even trade anyway. I trade a lot of break-even lately, but I'm completely cool with it. Like it. It's good. It's better than losing. Long trade. Same thing here. So there's internal range liquidity over here. So high chance that it will be taken, right? So 22, 32. It is quite, it's not that big. So you would maybe, even if you let it slip, you enter here and then you don't get anything out of it because the highest point is here. And this is without breathing room. So break even trade, why break even? Bullish break, not a bullish break, stop to break even. What else is there? That's basically it, I think. I'm not gonna do a forecast in this video. I might do a forecast tomorrow evening. I don't feel like doing a forecast right now. That got taken. This is a nice liquidity grab, and then we get maybe continuation down. But for now, we reach the discount of this leg. Got to keep that in mind. So it is very valid now to look for longs. Now, if we clean all this up and mark this on as our bullish break. Why that one? Well, that's just the highest one. This one is valid as well. But I prefer this one as we had a high, a low, lower high, a lower low. Bullish break. I'm already making a forecast, but I'm gonna cut it off. I'm just gonna mark this on, and then you can look for this shit with the news again. Let me see. Okay, I'm just gonna do it slightly differently. You can look for longs below here. And then we have a shit. Yeah, just longs from below there. I'm gonna figure out what's the best way to do this. All right, peace out. This was like a recap covering mostly London as New York. Well, New York did give a nice short here, actually. Did it? No, it didn't. Nope. Ugly. Maybe here, but nah. Just not the cleanest. This one was an impulse short. This was a break-even trade. Then that one got violated, this area. So we're not interested in that area anymore because there's no reason to trade from there. We took this liquidity, nice bearish structure, bullish break. And now we got, maybe I can do that one, but it's pretty big. To long it from there. Essentially, you just wait for below these lows and then get a 5 minute market shift, and then we enter. Yeah, I like this area. 5 minute market shift, enter. All right, peace out. I'm gonna do a recap, I think tomorrow. A forecast. Peace out.